Hello, I'm Tammy with your Week in Forex from UFXBank. Today we will take a look at last week's market highlights. The dollar rallied for the second week as the DXY traded above 77.75. Global equity markets started the week strong, but eventually unraveled as risk aversion crept back into the markets on Thursday. Concern grew over economic recoveries in places like Greece, as well as the U.S. Federal Reserve stating that emergency programs instated to ease the financial crisis will be wound down in February of 2010. For a closer look at the markets, we're joined by foreign exchange analyst Martin Smith. Welcome, Martin.
Hi, Tammy.
Initial instinct would be that the U.S. Federal Reserve's decision to wind down emergency programs that were enacted for the financial crisis would be good news for the markets. Yet, I'm not so sure.
Well, there are a number of factors to analyze here. Firstly, I believe a lack of liquidity in the market is the main culprit. It's year-end and no one's taking any chances, and traders will want to secure their P&L. The hint of pessimistic news, traders are collapsing positions or covering shorts. Secondly, the market had to digest some negative news on Thursday across a number of sectors. Combine all this with concern over Greece's economic recovery and now the removal of backstop emergency programs, and, well, market jitters return.
So how does this lack of liquidity affect the dollar?
Well, the dollar's been strong when risk appetite is subdued, so the lack of liquidity in the market is definitely strengthening the dollar.
So do you think this dollar rally will continue?
Well, the dollar's in a win-win situation. Fear sends the greenback higher, and now so does positive economic news. As we know, the correlation that had been in place for nearly a year between positive economic data and a weak dollar has finally broken down.
So we can infer that this dollar rally will continue.
Well, let me state as follows. I wouldn't bet against the current trend in the current environment. So in the short term, yes, I do believe the rally will sustain itself. However, I'm not convinced that this is the rally analysts have been anticipating.
In the U.S., PPI data shot up while CPI stayed relatively within expectations. It seemed like the markets were ready to hear a change in sentiment from the Fed.
Well, the PPI jump by 1.8% was quite surprising, although it quelled the next day, of course, by the CPI data, as you mentioned. We have to remember that inflation has been kept in check for an extended period of time. The Fed's primary consideration here is to get the economy rolling before concerning itself with what amounts to still relatively low inflation.
Coming upon this holiday trading week, what can traders expect?
Well, there are two big economic prints this week. In the UK and New Zealand, GDP figures will be out. Given the dollar's recent strength, it's safe to say that a surprise to the downside will probably cause the cable and Kiwi to break through support. However, it's doubtful that a surprise to the upside will cause the Kiwi or cable to break through resistance, but there would still be significant price action. Aside from these prints, we can expect volumes to be light, and barring any unforeseen defaults or concerns, the majors should trade the range.
Well, thank you, Martin, for joining us once again. Until next week, I'm Tammy, and be sure to visit us at ufxbank.com for simple, safe, and secure trading.